So we're doing today, folks.
I'm like,
So you'll notice my attire is different today, and I've had several people comment on it. So really so shocking for me to wear a hoodie.
yeah.
So my rationale behind it is this, is that I was going to put out a dress shirt today, but I'm doing a DSP thing tonight, and this is my preferred DSP attire, so I'm just going to wear that, you know. It is a true hoodie because I got the pockets in front, you know, and like keep the hands warm, you know. That's yeah, see, it's like it's a funny story how my dresses, my attire has evolved over my time being here. So my first 5 years here, I was very much a dress shirt, slacks, and dress shoes attire. Then I got to the year before I started hit tenure. I said, if they're going to deny me tenure because of my attire, I don't want to work here. So I started wearing jeans. I eventually assumed that I'm just going to devolve into Dr. Ison's t-shirts and shorts. I don't know. Maybe not quite that bad. There's actually a funny story. So you'll hear me tell stories about Alan Davis. Alan Davis is a former tax professor here, and it's very sad that you don't get to know about him because he was a character. He was one. It was one of those things that I didn't even feel bad about making fun of him because he deserved it. But he would sometimes show up in the summer and he'd be wearing shorts. Now, the problem was not he was wearing gym shorts. Okay, that was the problem, is that he didn't own any t-shirts, so he would have a dress shirt and gym shorts on. Which you want to talk about a conflict in styles? That was thing, and so yeah. But you know, it's warm in the building, so you got to do what you got to do, I guess. All right. Wrong slides up today. This is going to confuse somebody, but I'll do it. And chapter 4, we're on chapter 5. So as I fix the slides, let's reflect on what it is we talked about last week or last Monday. So a lot of information that I was throwing at you all, and I was saying this is something that's going to be on the exam that you will need to know. So let's make sure we know it, shall we? So we had 7 assertions. I'm not going to talk about the eighth assertion. It's not a real assertion, but let's talk about the first 7. So there's the big 3. 2 of these are opposites of one another. What are they called? You should know these by now. No, go. Completeness and existence occurrence. Okay, completeness and existence occurrence. Completeness says, did something get recorded? Okay, full stop. Existence occurrence says, we know something is recorded. Can we find evidence of existence? All right, they're moving in opposite directions. Which direction moves from bottom to, or which one moves from bottom to top? Completeness, and which one moves top to bottom? The other one, existence occurrence. Yes, obviously. All right, so that's 2 of our big 3. What was the third one? Wow, I am so disappointed. You guys don't get to give me grief about my attire if you can't answer me the big 3. I was okay with like not knowing the other 4, but the big 3, I said you guys should know these really, really well, and I'm just like, oh, okay. Starts with the letter V.
Veracity, valuation.
Valuation, allocation, accuracy. Veracity is a good word though. Valuation, allocation, accuracy. It's like one of the 5 V's from AIS. So valuation, allocation, accuracy just basically says, did get something get recorded at the proper value? All right. So the reason I said those are the big 3 is that those 3 represent 75% of the examples that we're going to look at in this course. At least anecdotally, I'm not going to hold. You can't hold me to 75%. It could be more or less given the semester. So that's 3 that you should know. Let's talk really quickly about the other 4. So we have one that's unique to just account balances. Has to do with whether or not you should recognize assets or liabilities on the financial statements. What's that one called? Rights and obligations. Rights and obligations. Okay, rights and obligations. Then we have whether something should be disclosed in the financial statements. In fact, the PCOB actually uses and disclosure as the last part of the phrase. What do we call that one? Presentation. Yeah, presentation. Related to presentation is whether something's been recorded in the correct account. What do we call that one? Classification. And then we have the final one, which whether something's been recorded in the correct period. And this is only relevant to transaction events. It's cut off, like I said. So if you don't know those by now, get on it. Okay, get on it because it's important to get to know. I know you're saying, well, we've got a week before the exam, Dr. Barnes. That week will go by quicker than you possibly imagine. So get on it. You need to know that. Speaking of other things we need to know, let's talk about evidence. All right. So let's just go ahead and start with our highest forms of evidence. We have highest reliability. What do we mean when we say high reliability of evidence? Sorry.
Basically, if it's high reliability, that means that the auditor performed it themselves.
So like I said, the source of the evidence comes from the auditor itself. So high reliability is something that's performed by the auditor. We have 3 forms of evidence that are very high reliability. Okay, what are those 3 forms of evidence? So one is looking at a building and say, a building. What do we call that? Inspection of tangible assets. Inspection of tangible assets. We've got something where we go in and redo the client's procedures. What do we call that one? Reperformance. And then we redo their math. What do we call that one? Recalculation. Okay. Let's go to the opposite end. Go talk about the ones that are low reliability. One is watching people do their job. What is that called? Observation. What do we call it when we talk to people? Inquiry. Okay. Then we have the ones in the middle. We've got something that's a third party request, so an external party request for information. What is that called? Confirmation. Confirmation. By the way, when I talk about confirmation, what did I say about confirmation that I said you have to remember and it's always going to be on the exam? Cannot be used as a test of controls. It is only going to be used as a test of account balances, okay? In this course, never used as a test of controls. Never, 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 never. By the way, did I say never enough times? Good. Remember that for the exam. Somebody shook their head. I saw somebody on the corner of my eye shook their head. All right, never. All right, there we go. So then we have our traditional kind of default test, which is looking at accounting records. What do we call that one? Inspection records and documents. Okay.
So we have our traditional default. Check it out.
Thanks, Barry. All right. So, and then what am I missing? I'm forgetting one. I should know this. Hold on. I'm going to look at my cheat sheet here. When we talk about inspection records and documents, we also talk about there's two special types. One of these is testing specifically existence occurrence and it moves from top to bottom. What is that called? Vouching. And then the other one is testing completeness and moves from bottom to top, bottom to top. The top to bottom, the bottom to top. Yeah, it's tracing. Trace to test completeness. It just also occurred to me. Oh, no, we're good. Okay. And then the final one that I'm missing, what we're going to talk about today, this is actually looking at trends or developing an expectation. What is that called? Analytical procedures. Okay. So we'll get more into those in detail. By the way, when we get to the debrief for the discussion, I strongly recommend that you take notes or at the very least review this as part of your exam because the detail that we're going to go through, all of this is relevant for the upcoming exam. Even though you were only assigned one piece of evidence, you're responsible for knowing all 10. All right. So before we get there, though, we're going to talk about audit documentation. So real quick about documentation. You will not always hear the term documentation used in this course. In fact, you've probably heard me use a term for documentation. I use the term work papers or working papers. Those are all synonymous terms. So, you know, the EWC files that we've been doing over the course of the semester so far, those are all examples of audit documentation. Those are examples of working papers that you may use in practice. So, audit documentation has 3 basic functions, okay? And the way you should remember these is that you won't need to get into details about memorizing the entire terms, but you should memorize the key words, okay? Provide principal support for the representation of the auditor's report. The audit was conducted in accordance with generally accepted auditing standards, all right? Which I have talked a little bit about generally accepted auditing standards already in this course. These are the rules by which the auditors operate by with respect to the quality of the engagement. We're not going to go into a lot of detail. Suffice to say that the rules that you have to follow for financial reporting are not the same as the rules you have to follow for quality auditing, all right? This is going to be what dictates quality of audit. So support for GAS, support. To aid in the planning, performance, and supervision of the audit. This is an aid tool. So we have actually our responsibilities that we have to do during the planning phase. Our documentation is going to aid in our preparation of those tasks. All right. And then finally, provide the basis for review. So review the quality of the work provided by written documentation of evidence supported in the auditor's significant conclusions. So basically, support says this is our evidence to show that we did our job in accordance with GAS. Aid says this is going to help us as we conduct the audit, both from planning and from the actual conduct of the audit. And then subsequently, at the end of the audit, this is going to help whoever's reviewing the audit understand what was done over the course of the audit. It reads like a story. It actually is going to be steps that go along the way, and we use the documentation to tell us at any point in time what it is that we need to do. Now, the content of documentation, largely this is going to be somewhat superficial with respect to the context of this course, but I do think it's important to go through just as a basic understanding. So it's a principal record of the audit. This is basically the evidence that you performed an audit. There's an old saying, and it's actually one on the last slide of these slides, that says if it's not documented, it is not done. So it doesn't matter if you performed a task, if there's no documentation out of it, then it doesn't actually, for all intents and purposes, it doesn't exist. Because documentation provides the principal support for the representations in the audit report, it should provide information regarding 1, auditor compliance with auditing and related professions practice standards, so that we make sure that we follow GAS and we follow the according standards of our profession. Now, remember, depending on what type of client we're auditing, we follow two sets of standards. If it's going to be a public client, we follow PCAOB standards. If it's a private client, a non-issuer client, we follow ASB standards. So documentation should dictate both generally accepted auditing standards and the standards that we're following for the conduct of testing. Also provides the basis for the auditor's conclusions concerning each material financial statement assertion. So keep in mind, our goal at the very end is to issue an opinion saying, here's what we believe the financial statements look like. Our audit documentation provides the support for that. It provides the support for our opinions rendered. Then finally, evidence that underlying account records agree to reconcile with the financial statements. This is a really important one because we need to show that the work that we were doing is consistent with what the client is representing. Right? So everything that we do as part of our engagement should go back to what the client provided us. Additionally, should enable a reviewer with relevant knowledge and experience to understand the nature, timing, extent, and results of procedures performed, the evidence obtained, and conclusions reached, and determine who performed the work and the date such work was completed, as well as the person who reviewed the work and the date of such review. So anybody who goes back and looks at this documentation should be able to determine what was done, why it was done, what the results of the work were, and who did it. Okay, and also when it was done as well. I guess I probably should throw that in there. Now, the form, content, and extent of audit documentation depends on factors such as the size and complexity of the entity, the identified risk and material misstatement, and the nature of audit procedures performed, and other factors. In other words, audit is not a audit documentation is not a one-size-fits-all format. Basically, it will depend on what the situation is in any given circumstance, and we will have to adapt the audit documentation to match that. This will also be relevant when we start talking about the extent of testing and the extent of work. Audit documentation is heavily relevant on that. So if we have to do a lot of work in a given area, by logic, we'll have a lot of documentation in that area. If we do minimal work, the documentation will be minimal. But all of it needs to be justified within the context of the audit. So some examples of audit documentation you should be aware of. Here's some examples of these. We will get exposure to these as we move through the course of the semester. But I do want to talk about two underlying fundamental concepts that you need to know. Basically, audit documentation is segregated into two categories. The first category is called current file. Current file is just as it sounds. It relates to the current period under audit. So you can kind of see their financial statements, the audit plan and program for the current period, minutes from the committee board meeting, the work trial balance, and then the journal entries and work papers that support the financial statements accounts. So if it relates to the current period under audit specifically and no other period, it's going to belong in the current file. Basically, the way you think of current file is this is something that is subject to change. It will change from period to period. All right. The permanent file, on the other hand, these are items that are included in the documentation, but generally do not change from period to period. So we can see the corporate charter, the chart of accounts. You guys remember chart of accounts from 367? We talked about that when we did NetSuite. So that's going to be included there so we can see what the account categories are. The organizational chart, stock and bond issues, and analytical procedures results from the previous year. Now, so the way to think about permanent files is these are items that may change to some small degree, but generally are persistent from period to period. We see them consistently working from period to period. All right. Is everybody on board so far? I know I've covered this first part really quickly, but I want to make sure we got this part down before we get to the important part. So the next slide is what I think is the most important thing to remember about audit documentation. And it's so silly, but it's so critical because audit documentation basically has to have three characteristics associated with it when it's formatting. All right. So what are the three characteristics that you need to have in all forms of documentation? And the answer is going to be heading, indexing and cross-referencing, and tick marks. Okay. So let me explain these a little bit more in detail. Then I'm going to show you an example to kind of illustrate this. So a heading is just as it sounds. It's at the top of the documentation that says, this is what the documentation does. This is when the documentation is relevant to. This is the entity that we're auditing. To a lesser extent, you can include in heading, you could actually include the name of the individuals and when they perform the tasks as well. So basically, information about the tasks being performed with respect to that particular documentation. So if we're talking about, we're going to be looking at an example of cash testing here in just a second. Talking about cash testing, it needs to say, what is this particular work paper related to in cash testing? Next, we have indexing and cross-referencing. So has anybody ever looked at an index in a book before? Not me, Dr. Barnes. I just like to shuffle your pages. Yeah. So yeah, presumably everybody has looked at an index or a table of contents or something like that. What is the purpose of something like that? To provide you a guideline of where the content is going to be. It's a lot easier to find it when you look at an index or you look at a table of contents than just kind of shuffle through all the pages and say, oh, found it. Well, it took me 4.5 days. Yeah. So that's got to be the goal there, is that we're trying to actually provide some sort of context for where everything as organization, I should say, not context, organization. I've been using context a lot today. Organization for where everything lies within the work papers. Now, this is really important because it relates to this next one. And you'll notice I included these together. These are considered to be not synonymous terms, but related terms. This idea of cross-referencing. Now, cross-referencing, I think, is the most important item that we can actually list up here. If we're going to be talking about all of these items listed, I think cross-referencing is the most important. What cross-referencing represents is it's representing indexing that occurs across points within the work papers. So let me explain what that means. So let's say that I'm working on an accounts receivable file, and I've got a number for my accounts receivable in the file. Where does that number come from? Well, if I go back and look at the trial balance, the number that I'm auditing should be represented somewhere in the trial balance. So this document that I've created for accounts receivable testing, that has one work paper reference. We'll say it's like B12, okay? And the working or the trial balance itself is going to be like, say, A2. If I go to my work paper B12, you will notice that there's a notation saying this balance comes from A2, which is a work paper previous in the work papers. And then if I go to my trial balance, I'm going to have a notation next to my accounts receivable balance that this is tested in B12. I am referencing those across one another. That's a cross-reference. It's really, really critical because everything should have some underlying evidence that supports it. Then we have these things called tick marks, okay? Has anybody had an audit internship yet? Okay. Okay, do they make you fetch tick marks, Max?
Yeah.
Okay. So a tick mark is an old hazing ritual in auditing. If they say, go fetch a box of tick marks, and the interns walk around and says, I don't know where they are. And it's like, no, tick marks are not actually physical items. Okay. So yeah, what are they talking about when talking about fetching a tick box tick mark? What is a tick mark actually? A tick mark is a shorthand notation. All right. Has anybody ever looked at a map before and seen the legend on the map for certain symbols? Basically, the same thing holds true for auditing work papers. Instead of saying, if we're testing 100 items, instead of writing out longhand what we did for every single one of those 100 items, we just like put a check mark or a little oval or something like that to represent the work that we performed for that particular task. All right. So let's go ahead and take a quick look at this. And this is going to be a document that you're going to be working on much, much later in the semester. In fact, it's the actual last assignment of this homework assignment of the semester. But I wanted to illustrate what we're talking about when we represent these. So if you'll notice here, we got earthwork clothiers, bank reconciliation, which you should be familiar with from 302. December 31st, 2025, this is the balance sheet date, and it says the general cash accounts, what we're testing here. What do we say this was called again? This is the heading, okay, this is the heading. To a lesser extent, we'll actually got some items here. We've got the senior associate, and then you're going to have your own initials here because you're the one performing the work, so you would include those, as well as the date being performed. Those would also be included as part of the header, again, just for reference to know who did it and when they did the task. So yeah, that's going to be one piece of information. Also, you will notice up here that we've got 16-2. That's going to be our next item. That is one of our index items. That's saying where it falls within the working paper. So it says work paper 16-2 here in the tab, and it says 16-2 here. Now, why is that important? Because a little bit later on, I'm going to work on a different item, and it's going to say, I want to reference back to where I got this information. It says 216-2. What do we call that again when we reference to something that's previous? The cross-reference, okay? And the cross-reference only holds if I actually put the cross-reference here, which is what I'm going to do. I'm going to put a cross-reference here that says, look at 16-3 for where I got this number. Then 16-3 says, I'm going to use this number in 16-2. So that's an example of a cross-reference. Also, you'll notice that one has a longhand notation, and this one is a shorthand notation, as letter C. If we go down here, it says, trace the balance back to the bank confirmation. What is that shorthand notation referred to as? The tick mark, okay? It actually doesn't even say tick marks down here. It says, but these are all tick marks. These are all examples of tests that we perform. Now, generally speaking, this is pretty easy because there's only a limited number of items. Actually, it says tick mark up here. My bad. My bad. All right. So yeah, I knew tick mark was somewhere. I just couldn't remember. But yeah, we've got a limited number of notations here, but we're still using shorthand notation. If we were doing like 100, 200 items, then you wouldn't want to write all that out. You just want to use little symbols there. And Excel is really good with little symbols. So yeah. So something you get to look forward to, and you will see examples of those as we work through items through the course of the semester. All right, moving back to this. So again, 3 elements, really, really important, have to be on every piece of documentation, every working paper you provide. Heading, indexing and cross-referencing, and tick marks, okay? And you need to know what those all represent. Now, interestingly, how long do we actually have to retain documentation? The answer is, according to the SOX and PCOB, 7 years. So basically, the auditor has about 45 days from the conclusion of the audit to properly archive their information, their details. So it's gathering everything up and putting it in storage. So 7 years, unless a longer period of time is required by law. And the only reason that would come up is if there's some sort of investigation or litigation within a particular client, the auditor's files may be held for a longer period of time. I make the joke that Enron's documents are probably never ever disappearing, at least the ones that I understand did not shred in advance. Okay, but yeah, that's funny if you know anything about Enron. Anyway, okay, so that's all we're going to talk about with documentation. Again, please make sure you're familiar with that. I'm not going to ask long and flowing questions on there, but there will be questions on the exam about those, particularly about that last slide, because I think that last slide is really, really important. Now we're going to get to analytical procedures, this elusive item that we've talked about in multiple lectures that I said, wait, we'll talk about this later. Wait, we'll talk about this later. Today's the day. Today is the day we're going to talk about this. So analytical procedures, they can be powerful and versatile method for collecting audit evidence and obtaining assurance. One of the great things about good analytical procedures is we can completely bypass additional testing if they work, which we're going to talk about the situations that are used. Now, you'll remember that we talked about analytical procedures at different points of the engagement. We talked about it in risk assessment. Does anybody remember the word that I used to describe analytical procedures in risk assessment? Preliminary, yes, very good. Preliminary analytical procedures. Then we have the ones that are used during the substantive phase. This one's easy. What are those called? Substantive analytical procedures. Yeah, substantive analytical procedures. And then we use them at the end of the audit as well. They're called final analytical procedures. All right. Now, they serve different purposes. Preliminary analytical procedures are basically trying to identify any areas of interest that we should probably investigate further. As such, they are generally very simple in format. They don't do a lot of modeling. They usually just use ratio and trend analysis, which we'll talk about the different forms here in just a second. Substantive testing often uses modeling, complex modeling such as regression analysis or just estimation creation, to develop expectations of certain accounts that we can rely on for part of our test work and our assurance. Then at the end of the audit, we're going to look at the final numbers that the client has prepared and make sure that everything looks consistent. And if we don't have an explanation for why numbers look the way they do, then we are going to investigate those further to try to provide an explanation. It's interesting to note that out of these 3, 2 of these are required under both ASB and PCOB guidelines. Anybody want to guess which 2 are required? I'll tell you the one that's not required is not the one you guess. So preliminary and final are required. Substantive are not required, okay? Which is funny because those are going to be the ones that we talk about the most in this course. That is where it's usually, we're going to see the most wide array of analytical procedures, but it's not required that we do substantive analytical procedures testing, okay? So what types of procedures can we perform under analytical procedures? The answer is trend analysis. This is the trend of changes in an account over time. So everybody remember those from your 221 class or your finance classes, when you see how an account changes over year to year to year. Usually many accounts you expect them to be somewhat stable or not to be changing a lot. Also, what was something else you did in 221 when you took 2 accounts and you put mathematical operations with them together? What are those called? Dividing one by another. Ratios, ratio analysis, relationship between financial statements, accounts, and non-financial data. So we can calculate ratios. By the way, we can also do these jointly. We can look at ratio analysis over time, a trend for ratio analysis. Those are very frequent tests. And then we can do what we call reasonableness analysis. And you should write down here, this is developing an expectation, okay? Involves forming an expectation using a model. Now, depending on how much detail you want to put into this can be very simple, like the example we're going to work through, or this could be very, very detailed and complex, like using regression analysis to develop an expectation for an area. By the way, the one we're going to be talking about today is very straightforward. The one that you have to do for homework on Friday is a nightmare, all right? I'm just trying to set your expectations now. Okay. Nobody's going to walk into this saying that was fun. All right. But there's actually an important reason that I'm having you all do it. We'll talk about that on Friday. So make some notes here, okay? Because I talked about this a little bit earlier. When we talk about trend and ratio analysis, these are frequently used during preliminary analytical procedures and final analytical procedures, whereas reasonableness analysis is more frequently used during substantive procedures. And the reason for this is if we have a good expectation, if we develop a good amount or a good number, and it's consistent with what the client gives us, we can bypass all other testing. We don't have to perform any additional substantive test of details. Now, if I asked you, could you calculate depreciation? How many people think they could do depreciation in this class? So that's one of those things you learned in 220. I'm assuming everybody, okay? If somebody says, I've never heard that word, Dr. Barnes, then it's got selective hearing, okay? But depreciation is one of those things that I expect everybody to do. So we could develop an estimation for depreciation expense and accumulated depreciation and develop analysis on those. We're going to do an example here in just a second. So basically what we're going to be doing for this particular type of test is we're going to be walking through a procedure where we're developing a model and we're going to say, this is the amount we expect this account to be. This is what it actually is. Are those two close enough? Are they materially consistent with one another? Now, this is a really important point. This is not something you can just look at and say, hey, that looks good. We do have to have a criteria point for determining whether or not a number developed in analytical procedure is going to be useful. This is something called tolerable difference. You may notice it sounds like tolerable misstatement, and it's related to tolerable misstatements, but it's usually lower because it usually only deals with a single account. Now, if we're testing the entire account amount, tolerable difference can be equal to the account's tolerable misstatement, which makes sense because we're looking at the entire account. Now, our general guideline, which we're going to call a rule of thumb for tolerable difference, is going to be 5% of the recorded amount. In other words, if we develop an expectation and it's within 5% of the recorded amount, we can take that estimation to be, or that calculation to be consistent with what the client recorded. And we can generally bypass other testing. Now, if it's outside of 5%, we're going to say these numbers are not close enough. We need to perform additional testing in this area to understand the reason for this difference. So let's look at an example. This is generally going to be pretty simple mathematics. Now, I'm going to ask you a lot of questions and you're going to say, I don't know, you're the expert, Dr. Barnes. But I want you to kind of suspend disbelief and kind of do what naturally comes to you as we're going through this, okay? So the 2025 income statement, because I'm way behind on my updating slides, but it shows $983,000 of interest expense. We're going to develop an analytic procedure that develops an expectation by taking the ending monthly balance for the short-term line of credit and the average monthly, calculating the average monthly ending balance. Then we're going to determine the average interest rate for the year by calculating the short-term credit based on the bank's published rates in the monthly loan statement. And then we're going to take those two numbers and multiply them together. And that's going to give us what we believe our interest should be. Then we're going to compare those to what the actual number is. So let's suppose that we've got these numbers here. These are the numbers that the client gives or the bank gives us for the ending balances with the account. Now, if I want to determine an average, it's pretty straightforward. I add these all together and divide by 12. Okay, something you learned back in grade school. What's an average? It's like, oh, that's when you take a number and divide it by the number of instances. It's like, okay, that makes sense. We've been using those ever since, and they're very, very useful, especially in this situation. So if we've got these amounts here, we're saying we've got an average monthly balance in the account of $19,242,000 because these are thousands of dollars. So $19,242,000. All right. So next, we've got the interest rates on the recorded statements have remained stable over the year, fluctuating between 5 and 5.5%. Now, I want an average interest rate for the year. What would be a good number to use based on this criteria? You guys are so much better than previous semesters. Not all semesters. Some people actually volunteer, but some people just like, I don't know, Dr. Barnes, that's really, really tough. You know, it's like, what's an average of 5.5%? It's 5.25%. So kudos to you all, okay? I don't want you to say I'm talking trash about previous semesters. And it's like, some people just look at me just like, no. Yeah, that's kind of the way look it is. And hopefully they're not coming back and watching my lecture saying, Dr. Barnes talking trash about those. You know, they're not going to know who I was talking trash about. It's very selective. It wasn't you, all right? So, yeah, all right. So 5.25%. So what we're going to do is we're going to develop our expectation. 19,242,000 times 5.25% is 1,010,000. Now this is what our expectation is. The recorded amount was 983,000. So can we accept that amount as being close? What's always the answer to any accounting question if you don't know the immediate answer? It depends. What does it depend upon? It depends on this thing called tolerable difference, which we said our general guideline for tolerable difference was what? 5% of the recorded amount, okay? So 983,000, that's 5% is 49,150. So our answer is, if this number is within $49,150 of this number, we can accept this amount and move on with our lives, which I'm all for moving on with my lives when it comes to auditing. Like when I'm done, it's like, okay, I don't have to work on this anymore. I can waste my time on something else, okay? I should say it's never a waste of time. Auditing is always valuable and important. All right, so what's the comparison? $27,000 difference, 49,150. We accept the amount. We accept this expectation as being close enough to the recorded amount. In other words, it's not materially different, so we can accept that this number is close enough for us to accept. Isn't that great? Doing a little bit of work to avoid doing a lot of work later on, okay? Now, I say this was very easy. The expectation that you're going to be developing on Friday, it's a monster, okay? It's a monster. It may take you a little bit of time and it may a little frustration, but that's okay. That's how we learn, okay? That's how we learn. And with that, we are done with all the slides preparing for the upcoming exam, but we are not done with our discussion for today. We are not done with our discussion because I had you all prepare something for me. What was that? I gave you a list and I said, there are 10 types of evidence and I want you to tell me about these types of evidence. And everybody was assigned for one. I think everybody all the evidence had 2 except for Lindsay. I picked on her and I gave her just 1. She's going to have to talk about all of it. To be fair, there's a reason I picked that one and I picked that one individual. It was a randomized list and I said, whoever the 5th person is getting that, okay? Just happened to be Lindsay got it, okay? It's not because I'm picking on Lindsay. I don't want it coming out. I'm a cyberbully. That's already happening. Okay. All right. So let's go ahead and get into detail about this. So here we have all of our types of evidence. All right. So here's what I'm going to ask you is I've got your names here. And I said that this is going to be the one time I was going to operate somebody via Socratic method. I'm going to ask you what it is and some information about what is the procedure for it, the assertions. I'm going to ask you what's the reliability, why the reliability, and they're going to tell me which phase of the audit or phase of the audit that it works in, okay? And for the most part, you want to answer all those questions, Lindsay, and then I don't see Ozzy here, so whoever's with Ozzy may have to answer too. But, you know, it shouldn't be that particularly difficult because you have the answer to these questions in advance. So, Carter, we're kicking off with you. You've got the first one, inspection of records and documents. So my first question is, what is this particular test?
So basically, you're just collecting usually account balances, financial reports, bank statements, et cetera, but basically anything that is relating to the accounts or to the financial statement or anything that could be the documented evidence of how to get there. You're looking at those and verifying them.
So we're looking at accounting records is basically what you're saying. Good definition. Good definition. I approve. All right. What types of what assertions can we test or we use as evidence test?
Remember correctly, all of them.
Yes, you are correct. All assertions can be used with this respect to this type of evidence. All right. Then I'm moving on to Aiden. Aiden, can you tell me, is this high, medium, or low reliability?
I said medium because the reliability of evidence is obtained through inspection of records. And documents depend primarily on the sources of information, so external and the source of information. External generally more reliable. The reliability of the confirmation is affected by 4 factors.
Yeah. So we've got accounting records that are generated oftentimes internally, but occasionally externally. But other than that, they're not generated by the auditor. So we've got some other source that generates evidence. So that by definition is going to be medium reliability, and for the reasons that Aiden referred to. So good. All right. Then we have vouching. Okay, which vouching is a sub bullet point over here. So Emily, what's vouching?
It's a subcategory of inspecting your records.
That's right. Okay, that's good. So that's basically it's an inspection of records and documents that tests a specific assertion. Now the $10 million question, and I don't have $10 million, so you can just imagine $10 million. Which assertion does this test?
Does all of the top to bottom ones, that completeness and.
So it's a directional test. This is a specific test of one assertion. So which one is so if you remember, we've got the vouching, which is the arrow pointing down. So you were correct when you said top to bottom. Which assertion is top to bottom?
I thought it was more than one.
No, it's just one. Existence occurrence. Yeah, existence occurrence is our is a vouching test. Okay. So yeah, but you were correct in your assessment. It was top to bottom. Is that correct? Okay. What's the reliability, Drew?
Medium reliability.
Okay. Why is it medium reliability?
It uses both internally and externally developed stuff.
It's inspection of records and documents, so it's medium reliability, just for the reasons Ada said, but just kind of restatement. Very good. All right. And then I kind of missed this one. So Aiden, I'm coming back to you. All right. With respect to the phases of the audit that can incorporate this type of evidence, what phase of the audit can inspection of records and documents be used on? All three, yes. That's one of our very flexible ones that we use for all three. Now, Drew, I'll come back to you. Vouching, which phase of the audit can vouching be used in? All three, because inspection of records and documents. Very good. Okay. All right. Now, Lindsay, you've got tracing. Do you understand why I said only one person needed to be responsible for this? A lot of the questions have already been answered, but I'm still going to make you restate them. Okay. All right. So what is tracing? Yes. And which assertion does it test?
Completeness.
Completeness, because this is our bottom to the top test. Okay. This starts with source documents and moves to records, whereas vouching starts with our records and moves down to the source documents. All right. What's the reliability level? Medium, for the same reasons we talked about before. And what phase of the audit can be used? All three, yeah, because it's basically an inspection records documents use all three. So again, remember, inspection records documents is broad, but we have two subcategories that are very important. And you're going to have to be very familiar with that because you're going to be doing some testing of vouching and tracing for the assignment that you're going to be doing on Friday. So it's our part of our EWC assignment you already looked at. So you have to be paying close attention to that. All right, moving on to some more specialized tests. Let's see, we've got inspection of tangible assets. Cora, Ozzy's not here, so you're going to have to handle this on your own. Do you think you can do it?
I don't know.
I don't know. It's special. I'm here for you. I'm here for you.
Okay,
Okay.
thank you.
All right, what is inspection of tangible assets?
Physically examining assets.
Yes,
Just
physically
inventory.
examining. Usually, what type of assets?
Like inventory, like physical.
Physical assets,
Yeah.
but yeah, so we can look at inventory and cash, but we usually reserve this for what category of assets? Really, really big ones, okay, like property, plant, and equipment.
Oh, yeah.
Okay, yeah. So, is this evidence? Oh, sorry. What type of assertions does this test?
I said existence and occurrence.
Good job. It's existence occurrence. That's it. Yeah, existence occurrence. That's all there is to it. And then, what's the reliability on this?
High reliability
Why?
because if you can see it, it's there.
That's right. We're the ones doing it. If we can see it, if we can actually test it, we don't even need to really see it. You know, I don't know many blind auditors, but if they can go out and touch it, then they can actually tell us it's there and it will. As long as we can tell it's physically existent, then we can actually confirm that. And then three phases of the audit. Which phase of the audit can we use this one?
I said substantive procedure.
You are correct. Substantive procedures. It can be used during substantive procedures, specifically substantive test of details, but that's in the phase of substantive procedures. Cannot be used during the other phases. Very high reliability, but very limited in its use. It only tests one assertion. It can only use during one procedure area. All right. Moving on. We've got observation. What is observation, Luca?
Pretty simple. The auditor watch someone perform a task or follow a procedure.
Right. What assertions can this test?
Existence and occurrence, completeness, authorization, and cutoff.
Very good. Okay, so there's only certain numbers that can test. It's a really, really weird one. You want to say all of them, but it doesn't test all of them. It only tests a few of them. So you might want to take a note of that and test some very specific assertions in there. Okay. Moving to Anthony. Anthony, what is the reliability of this evidence?
That's low reliability.
You are correct, but why?
Basically, you can act differently when someone's not observing you.
Right. Yeah. It's Heisenberg's uncertainty principle. You measure something and it changes the measurement of whatever is being measured. So yeah. What phase of the audit can observation be used?
Risk assessment and testing controls.
Yes. And what other one?
It said it can kind of do the third one.
Yeah. So we can use observation in all three phases. We can use observation and use substantive procedures, usually substantive test of details. Basically, anywhere we need clarification of what the procedure is going to be used, we can do an observation task. I will concur that it's going to be more valuable early on in the audit. So it's generally by the time we reach substantive procedures, we have less need of it, but it can still be used there if necessary. All right. Inquiry. Max, what is inquiry?
Inquiry is interviews and discussions with individuals within the organization that are used for clarifying details, gathering explanations, and obtaining a deeper understanding of specific transactions or practices.
Good, good. Yeah, nice definition. What assertions can it test?
It can be
Let's take a look. What we got here? Yep, all of them. Very good. You beat me to it right before I got there, but if you used all of them, okay. So inquiry can actually provide us evidence on all assertions, but wait, there's something we need to throw as a caveat in there. So Autumn, what's the reliability?
It's low
Low. Why is inquiry a low reliability test?
because it depends on the honesty, competence, and objectivity of who's providing them.
You're telling me that people could lie?
Yes.
All right. Well, it's important to get that confirmation out of the way. Okay, that detail out of the way. I was looking at the word confirmation when I said and influenced by external stimuli. What phases can we use inquiry?
All 3 phases.
All 3 phases. Yes, it's very versatile. So observation inquiry, very low reliability, our lowest reliability test, but they can be used during multiple phases, which makes them very flexible and versatile. In fact, we usually begin multiple phases by starting out and saying, let's observe the processes, let's talk to people to make sure we have an understanding, and then use that to develop further procedures and routines. All right, confirmation. Drew, what's a confirmation?
It's a third-party request.
Third-party request, my 3 words exactly, okay. What assertions can confirmations use to test?
They can test all assertions, but the primary ones are completeness and existence and occurrence.
Yes. Now, this is a really weird one because it doesn't make a lot of sense because we're going to talk about how confirmations can test account balances. We can actually use confirmations for kind of an ancillary test of cutoff. So even though they're focused on account balances, we can actually do some weird testing with cutoff. So it's kind of an exception. But yes, they do tend to focus on whatever account's being tested. We're going to talk about the more the reason behind that a little bit more in detail later on. But confirmations can be used to test all assertions. All right. Nahum, what is the reliability of confirmation?
Medium reliability.
Medium. Why is that the case?
Because you have to depend on the objectivity and the third party.
That's right. The third party has to give us information. And so we're going to find out later on. Sometimes they don't reply very well or at all. All right. What phase of the audit can this be used in?
Substantive procedures maybe, but sometimes with risk assessment as well.
So there are really unique scenarios where it can be used, but I would say let's just go ahead and keep this for right now. We're going to keep it to substantive procedures. So substantive procedures. Now there's an argument that it could be used during all 3. I want to make note, I will accept risk assessment as a possibility. In this course, I will never accept test of controls as a possibility, okay? Does it seem like I'm hammering that home? It's like, it's really, really important to me. Like 11 years of teaching, almost 10 years. 10 years of teaching the class, and I still ask that question, and I still get disappointed by the results. But yeah, confirmation, never a test of controls, never a test of controls, at least not in this class. If you go onto a job where you're working on it and say, can confirmation be used as a test of control? Your partner may say, oh, absolutely, it can be. So Dr. Barnes is wrong. Yeah, Dr. Barnes is the ultimate authority for you right now. Okay, that's all that we need to know. Recalculation. John, what's recalculation?
Just be like testing the accuracy of information. So usually manually, but you could also like use some information technology.
Yeah. So yeah, using some sort of mechanism to kind of recompute or redo the math and the calculations that have been performed, which you made alluded to a point. What's the assertion that we can do recalculation with?
It would be valuation, allocation, or accuracy.
VAA, valuation, allocation, accuracy. One assertion, even though it's got 4 words technically. Valuation, allocation, accuracy. So yeah, important to note. But let's lean into that. Ethan, what is the reliability of recalculation?
It's highly reliable because the auditor creates the evidence.
That's right. The auditor is the one who's done the recalculation, so it's very highly reliable. We have a very high opinion of our own work, as we should. What phase of the audit can this be used in?
So standard procedures mainly, but also can be a test of controls.
I think there's select situations that can be used as test of controls. Generally speaking, we don't use this as test of controls, but I do think that there are exceptions to the rule. There's always going to be exceptions to every rule when we talk about evidence application, even confirmations. Okay, but for the most part, we're going to keep this into substantive procedures. Okay, that's the way we're going to be identifying it. So we've got a really highly powerful test, but it only leads to one assertion, only tests one assertion, and it can only be used during one phase audit. So much like inspection of tangible assets. Speaking of this, we got reperformance. Audrey, what is reperformance?
Reperformance is when the auditor does a procedure that the company does. So the auditor independently executing the controls and procedures that are normally done by the client to evaluate its effectiveness.
Very good. Okay, so what assertions can a re-performance test?
Everything but rights and obligations.
Right, and part of the reason for that is rights and obligations is restricted to account balance testing, and re-performance is heavily a transactions test. Okay, you're using to test different transactions within the entity, which kind of leads into an important question for a couple of important questions. So, what's the reliability, Kennedy?
It's high because it's performed by the auditor.
Very good, very good. And then, what phases of the audit can we use this in?
Almost always test controls.
Almost always testing controls. We can use it also during substantive procedures, and it can be, or it's, I won't say frequently, it's occasionally used during substantive procedures. This is not considered to be an exception. I would say that we could use it during substantive procedures. That being said, when you hear re-performance, you almost always associate that with the test of controls. Almost always. So it's important to remember that re-performance is one of those key test of controls that can. All right. Analytical procedures. Adrian, what is analytical procedures?
They are like it's developing tests and expectations and then comparing your results to the expectations.
So developing trends or expectation analysis and then comparing our results to that to see if we can actually gain assurance from that. Very good. This is an interesting one. This is an important one to note. Which assertions can analytical procedures test?
Then VAA.
You are correct. Okay. Now, I would say 90 to 95% of the time they test one of those assertions primarily. Which one do you think that is? I'm not asking specifically Adrian, just guess. Anybody want to volunteer a guess on this one? VAA, okay, almost always going to be VAA. Why do I say almost always? Because we're going to encounter a question later on in the semester where it's not going to be VAA, and everybody's going to be so shocked, and you're going to say, Dr. Barnes, every single instance that we looked at before this, it was VAA, and I say there's an exception for everything, and this is one of those exceptions that we do need to make a note of because it can also test completeness. All right, wrapping up. What is the reliability of analytic procedures, Vale?
Indirect evidence would offer less.
Yeah, I would say probably we're more on the moderate reliability simply because there's assumption that the numbers could be made up and could be falsified, but for the most part, that would come out through the results of testing. So I think medium reliability is probably the safe ground for this, but yeah, I agree with your rationale. What phases of the audit can we incorporate analytic procedures? All phases but one. All phases but one. And so one in the middle, test of controls. We don't ever use analytic procedures for test of controls, but we do use it for risk assessment. And remember, that's our preliminary analytic procedures. And we also use it during substantive procedures that are our substantive analytic procedures. That's actually got their own sub stuff there. And analytic procedures can actually be your best friend or your worst enemy. They're your best friend when you can actually gain additional assurance from them and have to bypass additional testing. They're your worst enemy when you have to do it for homework on Friday. Speaking of that, have a wonderful day.